Hey everyone, welcome to the KE Report, another daily editorial. As we are chatting right now with Brien Lundin, the editor of the Gold Newsletter, also our host down at the New Orleans Investment Conference that happened just a couple weeks ago. Brien, it was great seeing you down at the conference, and I had a great time catching up with companies and all the speakers that were there. I look forward to joining you next year. Let's talk precious metals as we always do, and kind of a broad comment on recent price action. Silver has been performing pretty well over the last week. Let's say even SIL has had a good week and a half of price action. Gold, on the other hand, has been mostly flat. The gold stocks have been mostly flat. Some of that upward momentum from the last 9 months has been a bit lost, but again, it's not breaking down by any means. Brien, what have you noticed in some of the price action for precious metals recently?
Yeah, and thank you, Corey. It was great seeing both you and Shad down at the conference. Had a lot of fun catching up with you and everybody else that came. It was just a wonderful event. But yeah, I think the relative resilience of silver is a sign that what we have been seeing has been a gold-only attacks. And if you look at the chart, one of the things I find interesting is we've seen a few short attacks or bear attacks on gold over the last month or so. The first, right after the election, when it was perceived as good for crypto, the results of the election were perceived as good for crypto. And for some reason, that was interpreted by some traders as being negative for gold. So, seizing on that excuse, they attacked gold in the paper gold markets, the futures and options markets, hit some sell stops, and gold shed about $200 off the price. We regained most of that back by the time of the conference. And as you remember, during the New Orleans conference, gold price was up strongly every day. Then, right after the conference ended, that Sunday evening, there was another attack on gold, this time on the excuse that peace was breaking out in the Mideast, which assumes a geopolitical premium in the gold price that I don't think was really there. So anyway, the same people came in, attacked gold, took $100 off the gold price. Then we began another recovery. This past Sunday evening, again, they attacked again and got gold about $40 down in those thin trading markets before New York opened. But we had a countervailing development, that being Trump coming out and announcing that he would institute 100% tariffs on any of the BRIC nations that tried to get away from the dollar as the reserve asset, the global reserve asset. And that was tremendously bullish for gold because a big part of the buying, of course, in this bull market has been central banks buying gold to gain some insurance or insulation from the dollar hegemony. And therefore, that latest attack Sunday evening really failed. It only ended up driving the gold price down about $10. And it started recovering again. Now, as we speak, the metal's down about $25. Not sure why in that regard right now, what kind of developments caused that. But generally speaking, the degree of these attacks, the effects of these periodic attacks on the gold price have been attenuated time after time to where they're really not having much effect at all right now. So I'm kind of encouraged by that. And I think it's been primarily a gold oriented development, and that silver has really escaped that to some degree. So, I continue to like silver here, but I really do like gold for the long term.
Yeah, Brian, gold has been very resilient, still hanging at 26.50. Not a bad price for the yellow metal. And to your point, every time there's been a hit on it, it's been bought right back. So still keeping steady. I do wish you would run the New Orleans Investment Conference all year long so we could keep seeing gold appreciate like it was at the conference. But I guess all good things come to an end. Let me ask you this. As far as the dollar, there's a lot of speakers that were at your event discussing what they saw as a forecast. I think the people that I heard more often than not, we're expecting some weakness. Do you see that as being another trend to watch in 2025, the dollar versus commodities, the dollar versus gold?
Yeah, I think so. It's dependent on so many factors. I'm a big believer that big thing you need to watch is the 10-year yield. And treasury yields are the predominant factor. and gold and the dollar tend to follow that lead. So dollar strength can result from either rising or falling 10-year yields, depending on what kind of safe haven buying or what kind of buying is going on at the time, because the dollar itself is regarded around the world as somewhat of a safe haven. But I think from a technical standpoint, a lot of the analysts you heard from at our conference saw that the upward momentum in that dollar rally was waning, and that was due to reverse fairly soon. And I think we're seeing that.
Oh, that dollar really went on a run there, but it is coming down a little bit. Hopefully that should, again, kind of support the precious metals. But then down to the underlying stocks here. Some of the larger silver stocks are doing well. A lot of the smaller silver stocks are broadly still lagging. And the gold stocks, those have done well pretty much all of this year, or at least most of this year, outside of just a select few juniors, I think, that haven't really done much. So, Brien, this whole concept of tax loss selling in the sector, is it around this year? What do you have your eye on in terms of the underlying equities?
Yeah, I think it is around this year to a greater degree than I thought it would be, because I really didn't see that there were as much or as many losses as we have in previous years. But it seems like there's enough, and we have seen some pressure on the market. I don't think it's going to be as bad as it has been in previous years, but there will be bargains found. I think that the real challenge right now for investors in the sector is that there are so many undervalued opportunities right now. And it's a big challenge for me personally, because I am up to my eyeballs in junior paper right now, and there's a lot more I want to buy. And I just don't have the available funds to do that. The markets have had a bit more volume, so you can, in some cases, get off of positions and rearrange your portfolio, something I'm trying to do right now. But, it is a target-rich environment right now with a lot of companies that are severely undervalued, and a number of companies, many of them on our recommended list or Gold newsletter, that I don't currently own right now, but really would like to get a position in.
Well, Brien, I'd also like to ask you about the seasonality factor we see moving into the Q1 run. Really going back a decade, I start remembering it happening in 2014, 2015. We see what people call tax loss selling between Thanksgiving and Christmas, let's say. But then at the end of the year, there's usually people starting to readjust their portfolios. A lot of news is held until the first of the year. There's a lot of people reallocating their portfolio positions at the beginning of the year. And we usually see that bump in January and February. Do you think, based on where we're set up technically, based on the news flow, based on where we're at in the sector, all those values that you just mentioned, those opportunities, do you think we'll see another seasonal run going into the Q1?
I think it's very likely. No one can predict the future, and I certainly won't pretend to. But my experience has been that quite often we have that early year January rally in the metals, and the mining stocks go along with that and follow along. And typically both markets, when that happens, will be seen to have bottomed in or around mid-December. Anytime from now to December 15th, December 20th, thereabouts. So if you have the available cash and you are bargain hunting, this is the time to do it. I know many years the juniors will have bottomed in mid-December, and by the time the metals start moving in January, or we get a more euphoric market in January, those who wait until January to buy are missing out on, in some cases, 20% or more gains in the stocks. So it's a great opportunity. Often, you really can never know if it's going to develop again in any given year. But it is a pattern that is quite frequent, and I think is likely again this year, given the fundamental background for the metals and for the miners.
So, Brien, what type of stocks are you focused on then? You've been on the show earlier this year talking about optionality plays. Look, those still have some room potentially to get off the mat. There's, again, a lot of opportunities, people are saying, in these underlying stocks. Where are you focused in terms of what you want to be buying?
Yeah, I do like the optionality plays. I like the companies with big deposits. Sometimes, the old optionality plays were big deposits that were not economic at then prevalent gold prices. And now they're all economic, but the market doesn't realize that yet. So I like those. I like the big resource projects that weren't marketed as optionality plays, but just big deposits. Like Banyan Gold has, 7 million ounces or more, and most likely a lot more. And, it's trading for under $10 an ounce right now. So those kinds of deposits as well that weren't necessarily thought of as optionality, just really big deposits that have established resources and are going to be economic at current prices. Those are big values right now. Back to silver, I think that junior silver stocks will offer the kind of leverage that few other sectors offer, because silver has shown signs of the past quarter or so of really responding to and leveraging big rallies in gold. And the silver stocks, the junior silver stocks, add leverage on top of silver itself. So you get leverage on top of leverage, really squaring the kind of potential you get by getting into the junior silvers. And I think that's something that I look to have a really nice run in the next spring, in the early part of next year.
Well, Brien, I know you also follow the exploration stocks. Are there any drill programs that you see going on or getting ready to release assays that really have your attention right now?
Yeah, there are a bunch that still have assays coming out. I saw Cassiar Gold put out some new drill holes that were very good as we speak today. There are a bunch that still have drill results coming out. So yeah, I can't resist the exploration plays. I'm a sucker for a good story, as you both know, and I think that's always a place where you can get outsized potential if you have the right teams and the right projects. Heliostar just put out some extraordinary results from Ana Paula a day or two ago, and I think they have, they're going to continue to come out with really good news. So the good plays that are continuing to put out good news, I don't think you can go wrong in this market environment.
Brien, what about this market environment, though, for these type of announcements, though? Heliostar, the stock did get a little bit of a bounce on the back of their drill results, and they traded some higher volume, so I think that's encouraging. But something like Cassiar, it's not really doing anything today. We're only about halfway through the day, but still low volume, and the stock is down only 1 cent. So not a whole lot of movement on the back of that news. Something that we have noticed is that drill results recently, at least, don't seem to be getting the same attention. So what does that mean for the overall market, the overall attitude for investors?
Yeah, I think it's a sign that the rising tide isn't lifting all boats equally just yet. Of course, it never does, but it really, there are certain companies that have a good following that react to news. And of course, the tide hasn't been really rising consistently over the last couple of weeks. So yeah, I think what you do is you recognize that, but look to the long term, look toward the horizon, and know that a deposit like Cassiar's Taurus deposit at 1.4 million ounces at good grades in a magnificent land position is very likely to be worth a whole lot more 2 or 3 years down the road. Heliostar, I think it's very easy for the market to see that right now with the kinds of grades it is turning out, that it's going to actually advance rapidly toward production. You don't really, or you don't always like to see a junior with an eye toward going into production for all the reasons that we know about. But when you have a special deposit that looks like it will deliver extraordinary economics and grades that are very high that can insulate you from any mistakes, and a good management team that knows what it doesn't know and will likely be able to bring on the kind of expertise it needs, that takes away that element of uncertainty about whether a deposit will catch the eye of a major, because the current management team, the company itself, is the obvious buyer of that project because they already own it. So they can bring it into production and start to deliver those kinds of revenues. And Heliostar in particular is already generating some revenues from the production assets that it had acquired. Of course, those production assets don't have a certain future to them at the current stage, but there is the possibility that they can get back into production at higher rates.
All right, Brien, I guess still a lot of opportunity out there in that sector, right? There really hasn't been that rising tide that has been around for a while that lifted all boats. October was a good month for a lot of these stocks, but some of those positive moves have also rolled back over. So now is the time at the end of the year to always look back over your portfolio and see what adjustments you need to make because, well, there has been a lot of money raised. There are a lot of companies in, quite frankly, a better position than they were in last year. So make sure, I guess, you are in those. Again, Brien Lundin, editor of the Gold Newsletter, also our host down at the New Orleans Investment Conference. Brien, thank you as always for your time.
Thanks, guys. Great to talk with you.